Introduction to Corporate Finance. Hello and welcome to this video lecture on Introduction to Corporate Finance. In this session, we will explore the fundamental concepts and principles of corporate finance, which play a crucial role in managing an organization's financial aspects. Let's dive in. Importance of corporate finance. Corporate finance is a vital field that focuses on controlling the financial aspects of an organization or a company. Its primary objective is to maximize the firm's worth and meet its financial goals through strategic decision-making. By understanding the principles of corporate finance, companies can make informed choices that optimize their financial resources. Capital budgeting. One of the key components of corporate finance is capital budgeting. Capital budgeting involves evaluating investment opportunities and selecting projects to pursue. Businesses analyze the risks and benefits associated with different projects to determine their viability. This strategic approach ensures the efficient allocation of the company's financial resources. Capital structure. Let's explore the concept of capital structure. Capital structure refers to how a company finances its operations and investments. It involves making decisions about the optimal debt-equity funding ratio. Several factors are considered when determining the capital structure of a business, such as the cost of capital, risk considerations, and the impact on the overall value of the company. Working capital management. Now let's shift our focus to working capital management. This area of corporate finance deals with the effective management of a company's short-term assets and liabilities. By efficiently managing aspects like inventory levels, accounts receivable/payable, and cash flow, organizations can improve their liquidity and operational efficiency. Financial analysis. Financial analysis is another crucial component of corporate finance. It involves evaluating a company's financial position using various tools and techniques. Financial statements, including the balance sheet, income statement, and cash flow statement, are used to assess the company's financial health. Additionally, financial ratios and trend analysis provide insights into the company's performance, profitability, and solvency. Shareholder value and corporate governance. Let's discuss shareholder value and corporate governance. Good corporate governance promotes transparency, accountability, and ethical behavior, ensuring that management acts in the best interests of shareholders. Corporate finance strives to increase investor trust by delivering returns while balancing the interests of multiple stakeholders. Recap and conclusion. Corporate finance plays a vital role in managing an organization's financial aspects. We have explored the key concepts, including capital budgeting, capital structure, working capital management, financial analysis, and shareholder value. By understanding these principles, companies can make informed financial decisions that contribute to their success. Thank you for watching this video lecture on Introduction to Corporate Finance. We hope you found it insightful and informative. If you have any further questions, please visit our website www.financestudypool.com.